Hello, my good people. It's my hope that you are well from wherever you are listening. Sijui the Article 12B, sijui studying order ngapi of the Constitution. I hope that the Lord have kept you safe. I know there is a lot of things that are going on in our country, but our lives has to move on regardless. Whether the deputy president is impeached this night or not, your life has to go on. And none of the senators who are discussing the motion of the removal of the deputy president is coming to save you. That being said, we can focus on getting to discuss something that now might come to affect you directly. And today is on a Thursday, and as usual, on Thursdays we have the release of the results of the treasury bills for the past 1 week. And today I don't want just to read out figures that you can directly get from the internet, but rather I want to extract some information that we can tell from this treasury bills results and the previous ones. One of the things that is now clear is that interest rates are on a downward trajectory. Now there is no question of whether the interest rates are going down. It's very clear that interest rates are already on a downward trajectory. And because I think we have seen the importance of having figures in the motion that is going on. I don't want to be Mwenge Mutuse and not be able to prove whatever that it is that I'm saying. So I want us to look at a few numbers and really confirm whether it is true that interests are on a downward trajectory, or it's just an imagination or a thought that I'm having. So we all know that we have three treasury bills every week. That is the 91 day, the 182 day, and the 364 days. We will get to look at interest rate for each of them for the last 3 weeks. So we start with the 91 days treasury bills. If you check the results of the results of the treasury bills on the 7th of October 2024, the interest rate for the 91 days treasury bill was 15.68% per annum. Then we come to 14th October 2024, 14.99% per annum. Then we come to this week, 14.7%. So we can see a very clear decrease of the interest rate. That is from 15.68 to 14.99 to 14.7. A very clear decrease. We go to the 182 days treasury bill, and 7th October 2024, the interest rate was 16.49% per annum. 14th October 2024, the interest rate was 16.09% per annum. Today, the interest for the 182 days treasury bill is at 15.63%. So from 16.49 to 16.09 to 15.63. We go to the 364 days treasury bill. 7th of October 2024, the interest rate was at 16.73%. 14th of October 2024, the interest rate was at 16.33%. The 21st, today, that is the 17th of October, the interest rate was 15.91%. So a decrease from 16.3% to 16 point, a decrease from 16.73% to 16.33%, and now to 15.99%. So you can see that we have a clear decrease in interest rates. And for the past 1 year, it is the first time that the interest for the 91-day treasury bill is going below 15%. We are talking of a figure of 14.7%. Now, and I can also after also checking the figures of the bids that were placed and what was accepted, I can already tell that investors have already checked on the trajectory and already started working on it. Because what happens in investment is that it is information that gets to guide you what to do. I want to show you that people are already working on the available data. And when interest rates gets to get on a downward trajectory, it means that interest in future are going to be lower than they are today. So the longer you fix your money at the interest rate today, the better for you, because it means that the rate that you get tomorrow for the same amount will be less. So investors are already acting on that information. And we have been seeing a trend where investors has been preferring short-term treasury bills, that is the 91 days treasury bills, over the 364 days treasury bills. But now, out of the issue of interest rates being on a downward trajectory, tables have turned. Now investors are preferring having their money with the government for a whole year for this interest rate that we might consider high because it is going down for a whole year than just 3 months. It makes sense that if I trade, if I purchase a treasury bill for 81 days, it means that it will mature after 3 months. And after the 3 months, the interest rates might have gone down further. Meaning, if I will be interested in investing again, I will invest in the rates with the rates that will be in the market that time, which is anticipated to be lower than what it is today. So what do? I just buy a treasury bill for a long period of time, that is a whole year, such that I will enjoy the rates that are here today for a whole year, because we are expecting that the rates are going down. Let's try to prove that investors are already acting upon this information by checking on the volumes of funds invested in each treasury bills for the last 3 weeks. For the 91-day treasury bill, so we expect that the amount invested in the 91-day treasury bills to decrease. And that is exactly what is happening. Because on the 7th of October, the amount that was invested in the 91-day treasury bills was 12 billion. The amount that was invested this week in the 91 days treasury bill is 7 billion, a decrease of 5 billion. Simply because we have said that investors are now preferring long-term treasury bills. Long-term treasury bills. And I put it in quotes because treasury bills are short-term investments. But for the one comparing the 3 months and the 1 year, I'm preferring to call the 1 year a long-term investment. But technically it is not a long-term investment. We go to the 182 days treasury bill. So what do we expect with the 182 days treasury bills? Yes, it is at the middle, but it's longer than the 3 months period. So we would also expect that the amount invested in the 182 days treasury bills to go up. Let's see whether That is what is happening. 7th of October, the amount invested was 7 billion. Today, 17th of October, the amount invested is 11 billion, an increase of 4 billion. That is exactly what is happening. We can confirm now with the 364 days treasury bill to get a clear picture. 7th of October 2024, 9 billion. 17th of October 2024, 15 billion, an increase of 6 billion. So it's clear that people have already realized that interest rates are going on a downward trajectory, and the best you can do is taking advantage of the current interest rates, because we don't know how down they'll get, and definitely we cannot expect higher rates than what we are having today. We only expect them to go down. So people are already taking advantage of the current interest rates. So that is the information that I had. And from that information, the best you can do is that if you are planning to invest in government securities or whichever investment tomorrow, the best you can do that is think about it, and if possible, make your investment happen today with the current interest rate, because tomorrow we expect the interest rates to be lower than they are today. The other thing is that that is important to note. I will try and do a video on even trying to explain why the interest rates are going down. But it is clear to note that once the interest on government securities start going downwards, you should also expect the interest rate on your money market fund and other investments to start going down. Reason being, part of the money that you have invested in other investments is invested in the treasury bills. So, and the return that the fund manager get, it is the same thing that he comes to distribute to you. So once they get a lesser interest rate, they'll come and reciprocate the same to you. So expect the interest rates of almost all the investment vehicles going down. And the only thing that you can do is that if you are planning to invest next week, the best thing you can do is try and bring that decision to this week. So see you when we try and figure out and understand why the interest rates are going down.